The United Kingdom Tax Office seizes 3 non-fungible tokens and in the process makes them more valuable. That story and more on this episode of Taking Shelter. I'm your host, Peter Palsen. If you like this content, please subscribe to the channel. I'm joined again today by Matt Costa from Bestgate Wealth Management. Matt is a CPA with a lot of crypto clients and a crypto investor himself. Welcome back to the channel, Matt.
Thank you for having me.
Matt, should we be bothered by the ability of someone to take a digital asset off of a decentralized blockchain ledger?
Potentially. It would bother me if they had the computing power to change the blockchain. That somewhat undermines the whole security model of cryptocurrency, especially Bitcoin. I think in Bitcoin terms a lot. So being able to change that would concern me. But in actuality, what we have here is probably some private key was left unsecured, or the perpetrator gave it over for some leniency in sentencing is what I predict happened.
So this is more like the U.S. case of the Crocodile and Dutch, where the government was able to find or otherwise obtain the private keys and not a phishing attack like happened to some OpenSea members recently. The government in their filing or press release said that the 3 NFTs have uncertain value, but we now have a series of 3 NFTs, which were the first NFTs ever confiscated by a tax office. So I'll start the bidding, Matt, at $10,000.
That's pretty cheap considering the millions some of these things are going for, so I might take you up on that.
Colorado has announced they will begin accepting crypto for tax payments starting as early as this summer. Matt, this is a genius move. Tax authorities around the world are trying to identify crypto investors, and Colorado is now getting crypto investors to identify themselves. Should the IRS follow suit here?
The Treasury is running some pretty big deficits, so they would need to convert that to dollars quickly for funding, and maybe they can lock in the price and not have to deal with the volatility. Certainly, we saw last week Bitcoin down 8% with the Russian invasion of Ukraine, and then by the end of the day, it was maybe up 1%. So the volatility has been pretty crazy lately.
The crypto box on Form 1040 is back with slightly modified language. Are these changes significant, Matt?
I think they are. They got rid of the word sell, and perhaps that emphasizes exchange more. When I talk to prospects, crypto investors and such, the main thing they seem unaware of is that exchanging between crypto tokens is a taxable event. So maybe getting rid of that sell, and maybe that emphasizes exchange more, and that may help them be more compliant.
Yeah, and I got the question on whether the purchase of an NFT requires you to check that box on Form 1040, and my reaction is that if you're acquiring an NFT, you're probably acquiring it for crypto, and therefore you're probably disposing of crypto, and you probably need to check that box.
I agree completely. I don't think there was any intent of the IRS to exclude this. So I think it's a slam dunk. If you're exchanging NFTs, buying NFTs, it should be noted and should be checking that box.
There is an epic showdown going on in tax court about the taxation of staking rewards. Are they taxable upon receipt when you take them out of the oven, or are they taxable when you dispose of those baked goods or the tokens you receive for staking? The IRS and a couple of law firms are putting a lot of effort into this case, which involves $3,793 of taxes, or basically they're arguing over the cost of a 2013 Honda Civic. Matt, there is clearly something more at stake.
Yeah, it's certainly, it's interesting. I talk to a lot of people in the crypto space, and they like to say they came for the money, but they stayed for the revolution. And a lot of people are really here to, make a change. And so it's interesting, this taxpayer doesn't want to accept the refund because they really want more guidance. They want this to go deeper into the bowels of the IRS, tax court, whatever, some legislation to clarify whether staking income is taxable or not. And there's good arguments both ways. I think what they used in the court case was, right, when you write a book, is that taxable? No, it's when you sell it, right? So creating your own property, and the IRS calls cryptocurrency property, is not taxable. But then again, right, there is some service of securing the network, so maybe it is taxable. It's interesting. I'm eagerly watching and anticipating more coming here. It'll be big impacts on the space.
Well, I agree. I think it's more than just the timing of the income. It's the characterization of the income between services and potentially capital gains, which affects a lot of different types of reporting, like cross-border withholding taxes, use of capital losses, could be IRA qualification, Puerto Rico tax incentives, potentially foreign tax credit qualifications down the road, state income taxes. So there's a lot of reason within the tax community why it would be nice to get this settled, but I've got about 4 or 5 reasons why I view the IRS as fairly dug in on this position. So I think we're going to have to just keep watching through the year to see how this evolves. Coinbase is once again using Form 1099 MISC to report income to U.S. investors, not foreign investors, U.S. investors who have more than $600 of fees or rewards, including specifically staking. So, Matt, it looks like Coinbase is reporting staking awards consistently with the IRS position in this Jarrett case.
I haven't seen those 1099s from Coinbase yet. I don't expect to see a ton. I mean, a lot of my clients who are staking probably use a more decentralized basis. They don't keep it on a big major exchange like Coinbase. You can usually get a better yield in some of the other platforms and decentralized exchanges. So, that'll be on those clients to report better, because the software right now is calling it taxable. So that's good. It's consistent with the IRS guidance. But again, the Jarrett case is potentially turning that on its head. So it'll be interesting to see if people look to take an aggressive position. But I think as of now, the best thing you can do is call it taxable and to avoid a notice.
Man, what we do know is that starting with the 2024 reports issued for the 2023 year, Coinbase and other exchanges are going to have to convert to the more comprehensive Form 1099-Bs that brokerage firms use. And in addition, if you're a person in business and you're accepting or you receive more than $10,000 of crypto, you'll have to start reporting that to the IRS, similar to the receipt of over $10,000 in cash.
Yep. And I would note that there's certainly pushback from this from senators like Cynthia Lummis from Wyoming. She's a big crypto person, Pat Toomey, Ron Wyden. And it is going to be a big burden for reporting purposes. So there's a lot of talk about different situations that would soon be exempted from it, because there's just it's certain wallet addresses, you don't know who the other party is. I know they're trying to get KYC, AML better in crypto space, but it's fundamentally the antithesis of some of this stuff. So it's going to be hard to be compliant.
Puerto Rico continues to be the envy of the world in building out a crypto DeFi Web3 center. For the year 2021, they had a record number of applicants for their individual investor incentive. Matt, what we're seeing here is digital domination from a country that has a not so dominant power grid.
I've had a few clients ask me about it, and a few have actually gone down there to look and see if it makes sense to them, just get a feel for the real estate market and such. I know rents are up big, housing prices are up big. There's lots of money making its way down there. I am aware it is a area the IRS is looking to be enforcing more. I think you may have done a video on it 6 months ago that
Sure.
I enjoyed. But no, certainly lots of interest. It's a big move. I think people realize that it's a big undertaking, and then you're limiting your time back in the U.S. You still have to pay the tax on the unrealized gain. So I think people hear about it and then they learn more, and then they're not as intrigued, but there's still sometimes the dollars make that much sense that it's worth it.
Yeah, I think you put it well, and I think, as you point out, not only are taxpayers interested in this, but the IRS is interested in this. They have had a campaign going for almost a year. Not a lot of visible results yet, but that's coming. I would say, I would not call this Operation Warp Speed. I would call it Operation Puerto Rico Speed. But like I say, outcome is around the corner. If you're interested in discussing the potential lifestyle change involving a move to Puerto Rico, or if you receive an IRS notice, get in contact with us. Charitable trusts are attracting the interest of donative crypto investors who also desire to defer income on trading or defer tax on trading income. Matt, what is a charitable trust?
Well, there's quite a few different types of charitable trusts. The one I really like the most right now is called the Charitable Remainder Unit Trust, or by CRUT, C-R-U-T. And with that, they're trusts where you donate appreciated property into the trust, and you take a distribution from that trust over the remainder of your lifetime or a fixed period of time, and then the remainder in that trust at the end goes to the charities. What are the benefits? You get a charitable deduction for somewhere close to the present value of that charitable deduction that's guessed in the IRS tables. You get to diversify the assets in the trust. So you put in, maybe it's all Bitcoin, Ethereum, something highly appreciated. Then you can diversify to stocks, bonds, REITs, other things like that, and produce an income stream, and then only pay tax when you start distributing that and not on that diversifying trade.
So is there a right age, value, asset value, or current token price, high or low, that would suggest somebody should be looking at this financial planning strategy?
Well, the younger you are, the less it makes sense. It really doesn't make sense for folks under 30. 40, it starts to make sense, and it really makes a ton of sense in your 60s, 70s, 80s types. I have a client in their 70s with tens of millions of dollars of cryptocurrency that and no heirs. So it makes a lot of sense for them to, because they have this charitable intent, to put some of this cryptocurrency into the trust and get that diversification in there and not be so over allocated and get that charitable deduction now. And then they still are going to live on this 7%-ish income stream, right? If they put $10 million into this trust of cryptocurrency, they can live on roughly $700,000 a year, pulled out and taxable then, and get their big charitable deduction up front.
Sounds interesting, and this is something we do at Frost Tax Law. So if you are interested, get in touch with Matt or send us a note at Frost Tax Law. Matt, there's a lot going on in the crypto area right now, not just from a tax standpoint, but also from a intellectual property standpoint with respect to NFTs. Many other issues will surface during this year, and I look forward to having you back to provide more updates. Thanks for coming on the channel.
Thank you, Peter.
If you like the content, please subscribe. This has been Taking Shelter. I'm your host, Peter Palsen.